Well, when making all those New Year's resolutions for your portfolio, it's helpful to look back at 2025. Our countdown closer says that 2025 rewarded investors that practiced discipline, selectiveness, and the willingness to stick it out through temporary disruption. Liberation Day, I'm looking at you on that one. So what type of investor will 2026 be kind to? Joining me to answer that, Nancy Daoud, Opus CEO and Ameriprise Financial Private Wealth Advisors with $1.5 billion in assets under management. Nancy, great to have you. All right, so what do you think for 2026? What sort of sectors are you really looking forward to?
Well, clearly the AI boom will likely continue. And I think the familiar story here is we have a third year in a row with stellar returns, with the drivers being a small group of AI and big tech stocks. And we expect that trend to continue. But I think we now want to look for more evidence of monetization, and all the billions of dollars that were invested in AI infrastructure, will that pay off? And will other industries, the broader market, begin to participate in all of this? And how fast will they adopt and implement AI? These are all things that we're looking forward to in 2026. I think longer term perspective, it's very positive. However, in the short term, I think we all have to manage our expectations a little bit, because valuations are unquestionably high, and we do have to manage that.
I want to talk about valuations. I asked this to a guest on the program this week, where I'm wondering if valuations are justified because AI is structurally changing this economy. It is a structural shift that commands a different way that we look at valuations. Do you buy that argument?
Well, clearly there is a business metric, substantiation to the valuations. However, there could also be some challenges looking ahead. Like I said, there's a significant amount of investments, both cash and debt, being invested into the AI infrastructure. We have yet to see whether that will pay off or not. And then really, honestly, it's about expectations too. Investor expectations play a very big role here. If we expect things to just continue and we think this is the new norm, we might be disappointed with a little bit of turbulence in the short term. But if we are more level-headed and we stick to our plan of long-term goals and appetite for risk, keeping that into account, and time frame, I think that 2026 looks very, very positive.
From a sector play, energy seems to be one of the most obvious. We have to figure out how to power all of these data centers, how to power AI. Why do you like energy?
It's exactly what you just said. It turns out that AI requires a great deal of power, and that's where it's going to come from. They sort of go together, and there's a great deal of investment being made into all of that. So we expect that to boom right along with the AI boom. Financials should do pretty well on a different note, and the reason, of course, is because of the deregulation and the OBBB going into full swing in 2026. We have yet to see some tailwinds from that. So lots of exciting things.
Do Fed rate cuts on the horizon also boost financials, or does that hurt them?
I think it likely will boost financials, especially mortgage rates and maybe some real estate movement a little bit better. But I think that overall, the fundamentals of the economy are extremely positive. With obviously some challenges that we have to be realistic about.
I want to talk about a big headwind. What's a black swan event? Something that no one is expecting, that maybe isn't priced into the market. What's sort of the biggest risk that you see on the horizon?
Well, there's always a huge amount of uncertainty with the market. Clearly, the geopolitical risk. We still have a lot of challenges overall in the Middle East, in Russia, Ukraine, in the Southeast Asia. I mean, those are all things that could erupt overnight that we couldn't possibly predict in advance, and that would affect energy prices. It would affect U.S. markets dramatically. We also have the midterm election coming up in 2026, which technically, I mean, most of the time, it really doesn't affect markets in the longer term, but in the short term, there's usually a lot of noise and a lot of emotion, and that can affect investor sentiment as well.
Nancy Daoud, really appreciate your time, your perspective. We wish you a happy new year.